Hello, everyone. This is Gino Barbaro, one of the co-hosts of the Wheelbarrow Profits podcast, here with my brosif and our community director, Josh Rusin, who's filling in today for my other brosif, Yaki Boom Boom Stenziano, who's out making it happen and fulfilling that part of our multifaceted multifamily. How we doing, Josh?
You know, G-Dad, doing well. Excited to be here, and I'm very excited to connect with our guest here today. You want to introduce him?
I'd love to. Guest today is Damion Lupo. I mean, his bio is great. I could probably spend the whole show talking about his bio, but let me introduce him real quick before we get him on the show. He's an American sensei, 5th degree black belt, founded and owned more than 40 companies, built a $20 million real estate empire from scratch, lost it in 2008, and then rebuilt his fortune using a totally different system of thinking. Also a best-selling author of 7 books, with his next one coming out in the fall called Unicornomics. Great name, bro. How to build or invest in billion-dollar startups from behind the curtain. Without further ado, Mr. Damion Lupo, a.k.a. The Wolf, bro. I like the last name.
Thanks, guys. It's good to be here, man. I'm excited about our chat.
So jump into your story. I mean, we were talking a little bit offline, and I love the story. I love the pain. I can resonate a lot with, and I think our listeners are going to love hearing about you.
Yeah, I appreciate that. The story is really kind of a traditional rags to riches, starting from nothing and dropping out of college and then building something based on just a belief that I could do it, which is what a lot of people in the real estate space do. They go, I can do that. Like, I can be the next success story. And so I went to some seminars and did what they said. And I went out there and built a ginormous real estate portfolio all over the country. And then my ego took over, or it got really, really big. And when that happened, I think the universe said, wrong path, dude. And it blew me apart in 2008. So I don't blame the economy. I don't blame my partners. I blame my egos. It was totally me. And it was when I actually owned that it was me, that I could change something, because you really can't change anything if you're pointing elsewhere. And that's what the difference, that's what made the difference, was saying, okay, which part of this was my fault? And then I looked at it all and said, it's all my fault. How do I fix it? And I changed, rewired, and started asking different questions like, okay, am I doing this for money, or am I doing this for something else, or is it both? And ultimately, during the reinvention process, I ended up writing a book about it because it was so intense. And I went through this process where I asked different questions. I asked why I was doing this stuff. And during that period, over a few years, I had a pretty intense experience of losing my dad, and watching him at the end of his life tell me he just really didn't get it all done, meaning he just didn't live. And that hit me. It was regret. And I said, that is not going to happen to me. So how do I live so that I'm not saying that I'm not saying there was more that I wanted to do? And it became more about something beyond just the money. And then money became a side effect. So now the focus is on breaking the financial bondage that is everywhere in society, and finding ways to do that. And I do that with some tools. I do that with thinking. I do that with a different focus of responsibility. And I think anybody that's listening now, if you really want to switch gears or change your life, it's a shift into total self-responsibility. And that's probably more important than anything. It's owning everything in your life. And that's what the big transformation for me was, so that I'm not trapped by never-ending cash and cash flow, and that being the end-all be-all. It's nice, but it needs to be a side effect of something that's more important.
Damion, I'm going to make 2 controversial statements to start out the podcast, and I'm going to correlate them to exactly what you said and what I truly believe in. Number 1, money is not the cause. It's the result. And until you grow, and until you get middle-aged like me, and Josh is getting there. I'm training him because I want to be around. You don't work for money, right? And my wife is like, the other night we had the argument. Oh, you're working hard, but I'm not really working for the money. I really love what I'm doing. I want to be a role model to my kids. I really want to help people out. So as you work, the Holy Trinity, work hard, work smart, work passionately. I'm going to say that on every podcast. If you can fulfill that, then you're really living, bro. Then you're giving back, and you're really doing what you want to do. You have to work hard, right? That has to be ingrained in you. But then once you start working smarter, it's like, dude, this is pretty good. I can become financially free. And then once you become financially free, the money starts flowing in, the opportunities start flowing in. And it's counterintuitive. It's not supposed to work that way, but it does. And I think the second thing is the modern day slavery is personal debt, is financial ignorance, and people don't want to know that, and they run away from it. And you quit college. I finished college. I was fortunate that my parents paid for me. But when people are enslaved by personal debt and by poor financial intelligence, that is what's ruining our society right now. That I think that's just taking everything over. And I think guys like me and you have to shed the light on that and have to teach people about becoming financially free. Don't worry about getting a job. Don't worry about going to college. worry about getting your nest egg, worry about becoming financially free, and then blowing it out. So why did you quit college? What did you go to school for? And why did you leave college?
Well, they actually invited me to leave because I started a bookstore on campus that put the other bookstore out of business. And they said, the president called me in and he said, you got to shut this thing down. You can't have a business. I said, yeah, but I'm paying for college. And he said, yeah, but they're going to leave. You're bankrupting them. And I said, well, that's because they're not competitive. And he said, either you shut down or we're going to kick you out. And I said, well, I'll let you know in a couple of days. So I quickly finished moving books all over campus. And then I was asked to leave, but I did pay for school in a week. And it was because I solved a problem and everybody won except for the bookstore. And I don't think that I have a moral problem with a monopoly that's hurting the consumer being put out of business. I mean, I'm okay with that. And so I realized at that point, I was not meant to be in some type of institution in a cage. If I was going to be a lawyer or a doctor or maybe an engineer, perhaps, but I'm an entrepreneur. And I create. I'm a money artist or whatever. I mean, I need to be out there doing things. And so college was a pretty terrible place for me to be. I needed to be out there basically getting bloody and muddy in the streets. And that's why I left. Now, granted, I did that 4 times, but that was the most extreme where I was thrown out. I was doing it for somebody else. Mm-hmm. And the problem is, I think a lot of people do that. And to touch on your point about the debt, do you know that the student loans are the biggest single asset on the U.S. government's balance sheet now?
I do now.
That's bondage. Yes. And people they get out of school and they've got these loans and then they go and they work and they're basically saying, well, my loans are just going to be there until I'm dead. I mean, more and more people are saying that. Mm-hmm. That is slavery. That's crazy.
It is. And it takes away your options. So it gives you, it creates fear. It takes away options. It takes away the possibility of looking to the future because you have this thing lingering over you. So it does more than just bondage. I think it's a soul-sucking experience. And I think more people have to realize why they're going to school. Now, I'm not saying college is bad because I think if you're going for a vocation, if you know what you're going for, hey, just go for it. But if you're really not sure what you want to do, take a year off. Just, figure out what you want to do and then just, lock and load. I want to jump back to the 40 companies and $20 million real estate. I'm going to go on a limb here and say that you read Ray Dalio's book and you heard about his book principles and the 2 things, blind spots and ego. So he talks a lot about, we make mistakes with ego. What happened with the real estate company? How did it come crashing down?
Blind spots and ego. Well, I mean, the funny, terrifying thing about driving your life based on ego is all of a sudden, the bigger the ego is, the more the blind spots happen because you think you can see everything, you think you know everything, you think you're invincible, and you're not getting feedback because your ego is saying you don't need anybody else's opinion. And that's one of the things that happened with me. I said, what do I need a coach or a mentor for? So I basically got rid of these people that at one point I was spending $10,000. I was really investing $10,000 a month on a call with my coach. Mm-hmm. And he was one of the premier coaches in the world. He was kind of a Tony Robbins, like $1 million a year type. I mean, he's very, very high level. And I said, what do I need this guy for? I'm making $1 million a year net. I don't need a coach. And that's when the universe came crashing down on me because I didn't see all the things. And like at that time I had 5 projects that were each supposed to kick out about $1 million. Within 12 months, each of those projects netted negative $1 million or more. And I just couldn't see it coming. So my ego pushed away the actual support that I needed which created all those blind spots. So Dalio, if you read one book this year, that would be the book.
Yeah, I love that book a lot. I forgot to introduce an acronym by Josh over here. It's DIG JAM. Didn't know what the hell that meant. Damn, I'm good. Just ask me. I mean, that is exactly what you're talking about. And anybody out there who thinks they're good, it's great. You should think you're good. You should think you're competent, but there's always space to learn. You learn, you do, and you teach. And as you teach, you're like, wow, I didn't know that. You're learning in the process. So don't become a dig jammer, because if you are, you're going to jam up your life like Damion did and like I did early on in our investing career. So, Josh, thanks for that one. He's smiling over here because we throw it around the office a lot. And, we're trying to educate people, trying to get people to become part of our community. And we always have guys raising their hands and saying, I want to work with you, but I know it all. And then you just have to throw it back to them and say, so what have your results been? Have you bought a deal yet? And they just get in their own way. So for people out there, just take a step back, blind spots and ego, they all get us. I think when you're younger, you feel a little more invincible, you're a little more risk taker, which is fine, but just really assess what you need. And we all need something. And everybody in the world who is super successful has multiple coaches, whether it's a financial coach, a health coach, nutrition coach, a swing coach, fitness coach, whatever it is. If you want to become successful at something, you need to be held accountable. So let's fast forward into the first book. How did you come up with your first book, and what did you write about?
Well, the very first book was back in 2004 when I really knew everything, when my ego was in the process of growing, and it was called Maverick Mistakes in Real Estate Investing. And it's basically how I lost the first $1 million. And I thought, oh, those are just lessons that, like, it's a seminar where you lose 25 or 50,000 on a house. I think how you do that is amazing to me when the house only costs 40 grand, but it happens. So I decided to write about it. And the reason I keep writing about these things is because if you're forced to write, you actually have to figure out what you know and put it on paper so that it's English, or it makes sense to somebody else. So I wrote about these things to document what the lessons were. So one, I could teach other people, and two, I could teach myself so I didn't do it again. And so that was the first one. And then the big transitional one was Reinvented Life in 2012. And that was because when you lose $20 million and you lose I was sleeping in my car at the time. I had lost everything. I lost my girlfriend, my dog. I lost it. When that happens, you don't want to do it again. It hurts so bad. You go, okay, how do I not do that again? Well, let me just put it all out there. And so Reinvented Life is behind the scenes of the build up, the breakdown, and then the processing of going into a different space energetically. So I wrote about it, and it wasn't just hey, here's my story. It was bloody, muddy, and painful. It was here's the story, and then here's the questions that you can ask, because everybody's got the answers. I mean, you guys have the answers for yourself if you know what questions to ask. And that's what this book is. It's a lot of really interesting questions that you can ask to help you reinvent into whatever you want to do. That was the point of the book, to basically empower people. It wasn't to say, here's the game plan. It was to say, here's the question so you can create your game plan and transition, because I believe you are powerful enough and you're smart enough, and you don't need somebody else to tell you what to do. You need to know questions to ask. And that's what that book was.
So you've touched a little bit upon your dad and the pain of your dad. So what were all the other learning lessons, and how did that inspire you? And I guess a follow-up question is, how do people use that kind of pain to motivate themselves to take it to the next level? Because some of them can be a victim in grieving and just not use it. How did you actually use that to motivate yourself?
Well, I think the first thing is you have to understand presence. You have to get present to the actual situation, the environment, or the lesson. If people aren't present, if they're like, I was really present with my dad in that last conversation. If I wasn't present, I would have missed the entire lesson. And most people are so tense, they're so wound up that they're missing all of the lessons around them, all the learning, and it's just they're unaware. So I actually reject the idea of the law of attraction, because I think it's more about the law of awareness. If you're aware, you actually can see everything that's right next to you. You don't need to go attract it. You just need to see it. But that has to do with letting go of tension. And this comes back to some of the martial arts principles that I've gone so deep into, where when you let go of tension, all of a sudden things open up. When you're tense, there's like a focal point, like when you're trying to kill a deal and that's your only thing. You might miss out on everything else in your life because you're so tense on that one thing. So the lesson was let go of that tension, and it'll create this presence, which all of a sudden creates awareness. And then you're like, oh, it's right here. Like all the money, all the relationships, all the possibility, but it has to do with releasing tension. That was a huge lesson that all of us can actually practice and get better at, because the more present we are, the more powerful we are.
And that's great. You're talking about life coaching. That's one, I guess, one of the big mantras in life coaching. You're trying to raise the level of somebody's, energy, and then let them release the negative energy and see the possibilities. And I think also what's really cool about that is, I can give you an example. Me and Josh are having an argument right now. I'm really pissed at him. I can't think of a response. I walk out the door 5 minutes later. Man, I should have said that to him. So it's exactly what you're talking about. And I think people, they just can't think outside the box. I think they get too emotional. I think you just have to calm the emotions, higher emotions, lower intelligence. And I think people have to really just stop and just, like you said, I love that. I love that analogy. So you said you regretted with your dad that he didn't get over there. What was that pushing point? How did that feel to you? And how did you come up with your next project after that?
Well, there's something that I came away with, and it was the idea that our life is right here, and if we want to have the life without the regret, we have to book it. Meaning, whatever it matters to you, you've got to book it. You got to put it on your calendar. You got to decide, and then be accountable to something. And so the project became me booking my life on purpose. It became doing something that mattered for more than just consumption. And so I said, I'm going to do something that can release people so that they don't have those regrets. And what could that be? Finance is trapping most of the population. Money is trapping most of the population. It can empower people if they use it, if they're aware, but they're not. So I thought, I've got to do something where I can leverage a lot of everything I know and other people that want to be a part of this. And so it became a singular focal point. It was like the story of, was it Darius, or the single point, the focus in the Sparta, the Persians, with the tip of the spear, that one thing, and all of my energy is going into that one thing to break down these shackles that people have, and so it also became very, very clear that it needed to be one thing. That having 50 things is very fractured, and this is true for everybody. If we have 50 things, we're not really going to go very deep on any of them. So the decision was, okay, what is that one thing that I can focus on, that I can become masterful about and go deep into and share, that people will pay attention to? Because if you ask somebody, hey, what do you do? And they hand you their business card and it has 17 different titles, you're basically an idiot and can't make up your mind. So what is that one thing? I mean, my business card says financial mentor, because I teach people based on what matters to them. And there's one primary tool that I use, but I know who I am, and we all have to figure out who we are so we can focus energy on something. Non-focused energy it's like a light bulb versus a laser. I mean, this is like life coaching stuff, but it's true. And I think if you're going to really dig into that, the book is the one thing, Gary Keller's book. I mean, that is the book to get clear on what your one thing is, and then just go crazy with it.
I like the analogy. First you go deep, and then you can go wide. But if you don't,
Yeah.
if you go wide and dig too many holes, it's not good. You really have to learn your craft, go down deep, and then go. Then you have the ability to go wide. And it's the same thing with real estate. If you get into real estate, get into multifamily. Don't get into fixing and flipping and leasing and wholesale and all. Become an expert at one thing, and then move on to the next thing. Diversify yourself, because you can still diversify within the multifamily space. You can sort of get into different areas and different markets, but learn that craft. I love that. What's that one thing that you're talking about, alluding to in the finance that you're focusing on?
The one thing is the $15 trillion event, and that is the retirement space. It's the retirement money that people basically have, but they don't actually use it. They don't know what to do with it. They don't know what options there. It's the thing is the QRP. It's basically control of your retirement money, and a retirement by design, so that people can tap into the money that they've got sitting dead, and they can also tap into other people's money so that other people are winning with them. And it's effectively taking control out of the Wall Street space and putting it into people's hands. And so that's great. And people say, well, now what do I do? And then I say, talk to Gino. I mean, seriously, you got to you can't just say, cool, I've got this thing and now that's it. It's a tool for people that are willing to take responsibility. So it comes back to that value. The primary value for my life is self-responsibility. The QRP is built for people that are self-responsible, because it puts their money and their choices and their vision for their life in their hands. So it's not by default anymore. And that's really where most people's retirement money is. It's on somebody else's platter, and they're just kind of hoping, which means they're smoking hopium, and that is their strategy.
Mm-hmm. So how did you hear about it? Because I mean, I've been in real estate for a while. I was always thrilled upon the self-directed IRA. That's the way to go. How did you stumble upon the QRP qualified retirement plan?
So being out there, and one of the reasons I spend so much time being out and about in different seminars and things, I mean, I went to a foot doctor seminar one time, and then I said, this is cool. So I went to a dental seminar, and I was around all these people, and I was the only non-dentist. I go to other spaces to bump into things that I'm not going to be exposed to in my normal life. So I was at a space at an event, and a guy said, hey, I have a precious metals company, one of my companies, and he said, I want to buy some silver from you. I'm going to use my QRP. And I said, what's a QRP? And he said, oh, it's my retirement plan. I have control of my money, and I can do things like buy real estate, and I can buy precious metals, and I can hold the metals. And I said, that's really interesting. So then I decided to go kind of poke around at it. And then I went crazy deep into it and read every book that was out there. I started reading all the IRS code, which, by the way, is fascinating and it'll put you to sleep. So it kind of depends on how crazy you are. And I just realized this is the greatest secret that's never been told. And people are thinking, oh, I've got a self-directed IRA. I've got control. And then the more I read and understood the nuances with the QRP, I went, the self-directed IRA is a freaking disaster, especially for real estate. I mean, and this is becoming more and more of a problem. And people are thinking right now, wait a second, what? The self-directed IRA is a disaster? And it's truly, what I'm seeing is people losing their entire IRA basically because they were successful in real estate. And that's going to seem crazy. So hopefully that stops people and they go, wait a second, what did he just say? Because it's dangerous. Investing in real estate with a self-directed IRA, it's literally dangerous because you could lose your entire account because of this thing called UDFI. I mean, it's like a weapon of mass destruction. It's crazy.
Let's jump into that, but I'm going to go on another limb, and I want everyone to look up the man Jay Abraham, because what Damion talked about is Jay Abraham. I think he's a genius. I think he's one of the founding digital marketing guys, what do you want to say. He's a guy who adds tremendous value. He's older now. He's probably late 60s. He's got, I think, 6 or 7 kids, so great for Jay. But he's an amazing guy, and he does exactly what Damion says. Go into other spaces. They're not related to your business, but they pretty much are related to your business in somehow, and that you can get so many different kinds of ideas from that space. So look up Ray Dalio and Jay Abraham. Those are 2 guys that we all have to read about. Now, I want to jump into what the UDFI is, because when I read this a couple of years ago, before I started trying to syndicate money, I said to myself, how am I going to take somebody's money from syndication, explain to them they may have to pay taxes on an IRA, have to pull it out? I was confounded. So this is one of the things that actually held me back from syndicating, because I know I would say at least half the money that you raise is from retirement fund. So go into what the UDFI is and give me an example of a client that you've had that has had that pain point. All of a sudden, he's making money that's supposed to be tax deferred, and now, I owe money?
Yeah, so I'll give you the case study is fascinating because this just happened, and I've seen people pop up with the same scenario unfolding. So this guy had some IRA money, self-directed IRA money that he had invested in a syndication, and his money went in, and then the deal was profitable, so success. And he's thinking, great, my money goes back into my IRA, and it was $58,000. That was his profit. $58,000 came back as the profit, and then his accountant said, you owe the IRS $25,000 today. And the guy's like 42 years old. And he said, how could that be? It's an IRA. And then he said, oh, because of UDFI. UDFI stands for unrelated debt financed income. And with syndications, with multifamily, there's debt. It's awesome. That's why real estate's so cool, because you can use debt and get really cheap money. Well, the IRS says if you use debt for an investment, then every part of that property, let's say it was like 80% financed, then 80% of the purchase price was debt, then 80% of your profits are going to be subject to this tax. And the tax rate is basically about 37%. So he made $58,000 and he has to pay $25,000. Well, here's the problem. All of his money, like most people, is in his retirement account. So he goes, well, how am I supposed to pay it? And they said, well, you can either distribute money out of your IRA or you can go find $25,000. He said, I don't have $25,000. They said, well, you've got to distribute your IRA. What that means is that he's literally got to pull like almost the entire $58,000 out of his IRA because he's going to pay taxes and penalties on it. He'll be left with about $30,000. He's got to take that 30 and pay $25,000 for the UDFI. His $58,000 just turned into $5,000. And this is what's happening. And so it's a disaster. But there is good news. There's a silver lining.
Well, that's why you're here. But let me ask you a question to that. Do you think a lot of syndicators, a lot of guys in the space know what UDFI is? I mean, do you think I think they're ignorant about it. I don't even think they know about it. And if they do know about it, they might skirt it. That's what was bothering me. I wasn't sure how to bridge that. What are your thoughts on that?
I think there's a combo. I think a lot of them don't know about it because they're saying, hey, it's money is money and money goes into a syndication and we don't really care. So they sort of ignore any consequences of what the money came from or where it came from. And then there are some people that go, let's just not worry about it. And the ones that I've heard people, and I think you have too, say, we'll just ignore it. And let's just get the deal done. Well, you're basically setting people up to get crucified and lose all their money. And a lot of that has to do with the custodian space in the IRA industry. And there are some good people, just like there are some good people in the financial advisory space. There are good people, But in general, I don't like that system because it's set up to keep money trapped. And so ultimately, these custodians have big ad budgets. They go into teach and they say, self-directed IRAs are the way. Well, that's because they want to have all that money under management. What they don't tell you about is the QRP, because that puts you in charge and it takes all those fees away from them. So they don't really tell you what's in your best interest, especially with real estate, because it's not in their best interest. That's the problem.
So give us some of the benefits, other benefits of a QRP. Let's say we stack it up against the self-directed IRA. What else do you like about them?
Well, there's like 4 big things that pop into my mind immediately. One, the UDFI is gone. It's exempt. And so here's what that means. If you've got self-directed IRA money, you can convert that. It's called a rollover. You roll it over into a QRP and it's tax-free, penalty-free, and now it's exempt. That includes a deal you're already in. So if you're in a multifamily, you go, oh, crap, this is going to cost me all this tax. No, you just roll the asset over into the QRP and now you're exempt.
I like that.
That's huge. You don't even need another one. Like that one thing is so good. But then, like I mentioned, you can buy precious metals. So if you want to hedge against the dollar, you can buy and hold precious metals. You can put $55,000 a year into this thing if you want to contribute. You can have it all being Roth money. It doesn't have to be, and Roth is after tax. What that means is that a lot of times people don't want to use retirement money for real estate because they say, well, I'm going to lose the depreciation and the capital gains. And well, yeah, but if you convert that money into Roth, you don't pay taxes on anything ever, so you don't care about depreciation anymore. And with the Roth, you can pull the money you put in out anytime. So you're 45 years old, you say, I've contributed $150,000. You can just pull that money out anytime you want, tax-free, penalty-free. How cool is that? You don't have to borrow it, but you can borrow. You can borrow at 50 grand if you want. You can just pull your basis out. You can't do that with an IRA. The list goes on and on. There's just no reason to have a self-directed IRA. And if you have one, run to the door and get the QRP because it's in your best interest. It's not in somebody else's best interest that's trying to sell it to you.
Wow. How long have you been in this space? How long have you been in the QRP space? About 4 years now?
I actually originally started in 2010, so almost a decade.
I'm flabbergasted because those are some really amazing differences, and you put one up against another. I hope you have an infographic or something in the show notes so we can leave down the show notes. I'm going to leave your contact information, obviously. I know you've got a great book that you've written. I read the book. Anybody can understand it. There's just so many benefits. I know Damien's going to be at our live event because he's going to be there talking about this and just having a booth there, because this is something that, people get started. How do they get started with you? What's the next steps for somebody to get started on this?
The fastest thing to do and the best thing to do is to get a copy of the book, because once you have, it's the QRP book. And if you go to qrpbook.com, you can get a copy there. You've got to educate yourself, because once you're educated, you're going to say, oh, this is obvious. So it's either obvious that you need to do it, or it doesn't fit you. What happens is people get the information and it's obvious and they jump. It's just getting that. It's starting with that. There's also a report that I'll send out to you that's about 8 pages, and it'll give you the highlights. So there's a link, I think, that gives you some additional stuff and some additional infographics that you're going to have, and it'll have an option for the book. So that's probably an even better link for people to go to.
Great. So I have one more long question before we get into the short answer question. What is your best retirement tip for the listeners out there?
Nobody is going to care about your money more than you, so you better take control of it, or you're going to end up being subject to somebody else's agenda.
Succinct. I like that.
I think that's a good agenda for every aspect of life, right?
Yes.
Having an employer versus opening your own business.
Mm-hmm.
Damion, what's your best habit for success? Obviously you're a pretty disciplined guy, being a sensei. If you had to pick one, what would it be and why?
Meditation, because it's the practice of presence. And the more you meditate, the more that you understand presence, the more you can actually succeed in every part of your life. If you're not present, you're toast. And so you have to find a way to get there. And meditation is the way to practice getting into that space.
At what point did you get into meditation?
I think it probably happened when I started doing yoga. And I asked a friend of mine, how the heck do you do meditation? I can't sit still, man. I got a squirrel in my head. It just runs around, chases these shiny objects. And he said, yoga. And I said, what do you mean? He said, well, because you do yoga, and at the end of it, there's this thing called shavasana, which is basically the time of stillness and meditation. And he said, you do this so you open your body up to being still. And I said, that's how you do it. So that's really how I train myself just to be still. because I wasn't good at it. I mean, it's hard for most people. I can't sit still for 15 seconds half the time. So, doing it for minutes, or I did it with Deepak one time for an hour. It blew my mind. But when Deepak's standing in front of you, it's not hard to be totally there. You're just like, whoa, this is Deepak, and he's doing his Deepak voice.
That's awesome.
Yeah, that's definitely something I need to hear. What about, it sounds like you're a guy who likes to read a lot, voracious appetite for consuming knowledge. What about your favorite book? If you had to narrow it down to one.
To one book, I've probably read 2,000 or 3,000 books. The one you mentioned, Principles, is a front runner. I would say Mastery by George Leonard, who is deceased. He was a martial artist, is probably my favorite book because it's about the pursuit of mastery. It's not about an end event. It's not about an ego. It's about your life process, and mastery is a process. And it applies to martial arts. It applies to life. It applies to relationships. Mastery changes everything.
I have a follow-up question. We talked about the book Unicornomics. Can you just talk about that? It's coming out, you said, in the fall. What is that? What's the book about?
It's basically the whether you're starting a business and you want to be the next Snapchat, or you're investing in something that you hope is going to be the next big unicorn. Unicorn is the term for $1 billion company. The book is really the behind the scenes pieces that you need to either look for in a business you're investing, or the pieces that need to be in place for you to have any chance of actually having that happen. One simple mistake, like filing the wrong legal documents because you have the wrong attorney, which I had in a recent deal, one of my companies. We literally filed the wrong document for an SEC disclosure, which meant that the company was doomed from the beginning, and there was nothing we could do to fix it except for close the doors. So it's those pieces, and we get so excited about the idea or the thing that's going to change the world. And if you miss these pieces, you're dead from the beginning. The team, the different pieces. This is really from the perspective of that $1 billion organization. And it doesn't mean you're going to hit it, because it's still a unicorn and they're a mythical beast. But it does mean if you miss those pieces, you're basically going to be a unicorn. You're just not going to exist in that space. You're going to get crushed. So it's behind the scenes, understanding that stuff, and to give you a chance at being successful, investing or starting something up.
So what was the motivation for the book? How did you come up with the concept, and how did you put it all together?
Every time you lose $1 million on a project, it's like a book idea. And I mean, it's understanding that, okay, there are some lessons here. I ask myself, what did I not know here? And what am I not seeing? And when I look backwards, I go, what was the book that I needed to read at the beginning of this thing? And I say, oh, that was Unicornomics. Well, it hasn't been written. I better write it. I mean, that was why those books get written, because I wished I had them, just like Maverick Mistakes in Real Estate Investing. I wish I had it in 1999. It would have saved me $1 million. Mm-hmm. But I didn't have it. I had Ron LeGrand's book. That saved me $1 million, but then I lost $1 million elsewhere on other stuff that wasn't in his book. So I had to write the book. That's why the book gets written.
So where do you see yourself going 5 years from now?
Deeper on the road to mastery. I mean, it's finding ways to continue to impact people, and really to give people the muscle. And because I don't believe that freedom has anything to do with cash or cash flow, I believe it has to do with the other C, which is confidence. And so my job is to empower people. So I'm building their muscle up, or at least giving them the ways to do it, and then they have to do it. So it's finding ways to train and teach and empower more and more people, because the ripple effect is that they're going to do it to other people. And together we literally change the world for the better. And so that's what I'll be doing in 5 years.
I love that. So how can people get a hold of you?
Best place to get a hold of me is to visit me at DamionLupo.com. And you'll see stuff about the QRP. You'll see stuff about the different books, and you'll be able to ping me, or come to Nashville and hang out. I mean, I'll be there, and it's all different. I'm everywhere. So it's kind of fun. You can kind of bump into me wherever you happen to be.
Well, listen, it's another tool in the toolbox, and it's a really powerful tool, and it's one that you understand. When you do understand, you're like, wow, where's this tool been my whole life? And it's for guys out there who are trying to raise money. It's a great tool. I'm not telling guys who are investing in real estate to go open a QRP and say that's the next thing. But if you get a little money, maybe you throw it in there. But just it's an opportunity, or as entrepreneurs, we're out there trying to create value. And one way to create value is to educate your potential investors on this amazing tool. So I just hope that everyone gets a chance to come down to Nashville, meets Damion. I'm looking forward to meeting Damion in person. So I just want to thank you for being on the show. This has been a really educational show for me. I appreciate it.
I appreciate being here. I appreciate you guys doing what you do. And that is probably one of the biggest takeaways that I would say for people with this particular tool. It's a way for you to help other people and create all the resources you're ever going to need for any deals that you want to do, while you're helping your friends, your family tap into something and empowering them. So when you think about that, there are very few things where everybody wins and you get to be the hero. I mean, you literally can be the hero if you're sharing information and giving people resources and tools. And I would encourage people to share, because together we definitely can win. It's an abundant world, and this is one of the ways to really live that.
Well said, my friend. I appreciate you being on the call today, and we'll see you soon. Thanks.
All right, sounds good. See you guys soon.
Yep.